We had a bullish move in the overnight hours. This is a perfect example of what I designed this morning briefing to do, to teach you guys how to prepare for a morning, kind of put your trading day together. And the first thing you want to do in the morning is get a feel for what happened in the overnight hours. It's a little bit like the chicken and the egg, kind of trying to answer the question, what came first? Our bullish move, which bled into the overnight hours in markets around the world, or their bullish move, which bled into our trading day. Sometimes it's one, sometimes it's the other, and sometimes it's both. It just creates a little feedback loop. So in the overnight hours, markets around the world did really good. I posted a little bit of information in the after hours chat, mainly because I'd rather post it in there. It seems that, it kind of stays out of the way when I post things over there. We have two Fed speakers today, Williams and Harker. There are additional auctions today. And then this, which I cut out of 5 Things You Need to Know from Bloomberg, which talks about the overnight hours in markets around the world. Now, Germany is still open, but Asia is closed. And we always want to start our day with that perspective. It gives a little bit of perspective on what to expect for our trading day. And of course, there's the peace talks, which, could derail everything. And there's still inflation and, the whole Fed thing. So there's always something to be concerned about. We just want to have a context, get a little bit of a feel for what to expect on the day. So we're coming into today's session bullish. I posted 2 trade setups. These come from Investors Business Daily. I get an email from them every day about breakouts. It's a little weird to be a breakout buyer if you've been taught not to buy breakouts. And when I first started using Investors Business Daily, that's one of their premier trade setups. 52 weeks highs, market sitting at all-time highs, breaking out into levels it's never been to before, and that's where they consider a really good buy point. It used to drive me absolutely crazy. But when you go and dig down into why they trade that way, it's because they only trade the top name stocks, which they have their own little proprietary tools to identify who's doing the buying. There's market logic that says what is strong will continue to be strong, what is trending will continue to trend in that primary trend until it isn't. So you just keep leaning into the idea that if it's strong and if it's trending and if it's continuing to move in one direction, you just keep running it in that direction. So then they look at who's doing the buying. If it's the institutions and they've already been identified through IBD's proprietary stuff, then they'll say, okay, well, this is the institutions buying something and increasing their holdings within a particular name. So then when it breaks out into all-time highs, they consider that a buy point. Now, not everything that they call out works, right? Because nothing works all the time. A little bit of realism goes a long ways. But they would not do that breakout buy trade in some junk no-name company that nobody's ever heard of with bad management and, bad fiscal numbers and all of that good stuff. They're only putting these buy alerts out there on companies that have been identified to be purchased by institutions, increasing quarter after quarter participation in the institutions, and then strong fundamentals, rising relative strength, blah, 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 right? They got a whole list that they go through. So their ranges on these buy points is usually like a 5% of the breakout area at the top of the chart. You still need to do your own due diligence. You need to go in and look at the markets and make a decision about how you want to trade them. But they do have the buy point, what they consider a buy zone, why they consider it a buy. And I posted those in the after hours chat. Help yourself. Before we move off of that, swingtradebot.com every night has a free scan that you can run that's looking for things like bullish MACD signal line crossovers, crossing above the 20 period daily moving average, bouncing off of the 20 period daily moving average, 52-week high breakouts. So it's worth checking out, swingtradebot.com. It's free. You don't need a subscription. Those wouldn't be buy signals, right? And continue to stress that point. Nobody's saying that you should just go out and buy those things. It's just bringing markets to your attention so that you can go in and then perhaps dig a little deeper and see if it's something that you want to trade. We do have the JOLTS numbers today. If you're unfamiliar with that economic piece of news, it's basically take this job and shove it. In really tight labor markets where everybody's trying to hire, you can feel pretty confident that you quit your job, you'll be able to find a job somewhere else. When we're in the opposite of that, if you remember how it felt trying to find work in '08 or '09, back after the whole housing fiasco, it was really hard to find work back then. And then even when you found work, companies really weren't willing to pay you very much, and they didn't really seem to care if you were there or not. Like, yeah, whatever. I guess we could put another person on the staff. It wasn't a really good job environment, right? It wasn't. If something good, you hung on to it. You fought for it. In the current environment, the JOLTS readings will give us an idea of whether or not there's still an aggressive hunt for bodies, for people, for staff, and it shows the strength of an economy. The really strong job numbers that we had last week was one more tick for the Fed to be able to say, you know what, we think we can not only have liftoff and strip our balance sheet, but we think that we can hit this market multiple times with these rate hikes and not have any real threat of damaging this ramped up aggressive economy. So if we get strong jolt numbers today, it's going to yet again validate the idea that they can raise rates aggressively and not have to fear that they're going to put out the fire, right? So uh, the numbers are important today. Really want to keep an eye on them and see what kind of follow through we get. Yesterday, we had a little bit of whiplash in the market. We had this mid-morning reversal or midday reversal. Not too much of a surprise that it landed right on top of those additional auctions that I talk about all the time. But it wasn't just the auctions that did this, it was news and a change of market sentiment. Now, this is kind of a muted version of it, but this is the failed flag that I talk about all the time. You can see that if you had snapped your fib along those lows, it gives you the 786-100 channel. And whether you used the wick or you used the body, it still presented that same channel. And we would have been looking for a breakout of this channel. At 11 o'clock, we had econ. At 11:30, we had econ. The market stabilized along those lows, began building a base, and then we started to get that flip, that reversal. Now, there's all these strategies like ride the 9 and moving average bounces and all that. This would have been too tight to get any of that, right? Generally speaking, we'd want to see something like a 50-period crossover or a 9-10 cross or a 10-20 cross, but all of this was just too tight of a range. So you wouldn't get anything like that. You have to try to find breakover signals that you can lean on to catch this move on the upside or the poor pullback opportunities, right? And that pullback opportunity lined up with our 5-minute open range low. So, we hit that low, we pulled back, got a running start at it, and then put our shoulder in and broke through the door. These market days in the indexes, whether you're looking at SPY or the ES, the day itself is a trade signal. If you're looking at SPY or the ES, the entire day that we had is a day that we've seen before, from the open to the sideways consolidation, to a dump and a break below the 5-minute open and then rallying right back up again on the other side of it. This entire day is a day that we've seen before. So when you're studying patterns and setups and trade opportunities and you're trying to become a day trader, take a look at the entire aggregate day itself and really consider, have you seen this day before? When you're new, that's going to be hard to do, right? You haven't seen it before. You just got here. So you got to go back and take the opportunity to look at what previous days looked like. Put the clock on it. You'll notice that the clock is a real useful tool in identifying at what time of day did this breakdown happen? What time of day do trends happen? When do they not happen? Now, the hard part about looking back and trying to find old price action is there's no news to associate it with, right? If I was looking back 3 months from now and I seen this midday reversal, I wouldn't know if it was connected to news or those additional auctions or anything like that, right? All I can see is that it had that basing along the midday and then the reversal back up on the other side. So from that point, it is a little difficult to do. But the shape and the scope and pace of the move itself, we didn't get a lot of validation yesterday. I was going back and looking at tick, trend, AD, UVol, market breadth. It wasn't there. So you didn't miss anything. There wasn't really anything that we could point to and say, "Oh yeah, look at all this confirmation we had. This was a absolutely amazing move, and we had all these things telling us to go in and get into the market." It wasn't there. You didn't miss it. The calendar today, 8 o'clock is when the dollar opens. 8:20 is when the bonds open. It's not in here. I'm just going to continue to say it every day until it's something that you already instinctively understand and think about. Every morning at 8 o'clock, the dollar opens. At 8:20, the bonds open. At 8:55, we got red book, and then 9 o'clock, 10 o'clock, 11 o'clock, and 1 o'clock. It's going to be one of those days today, right? Every hour, we've got an opportunity to be whipped around, big spikes, big candles, drops and reversions, and just it's very likely to be a difficult day. If these numbers are positive, we're going to really see a strong move above the levels that I'm going to be showing you here in a minute. And if they're negative, we're headed back down into that box with some real conviction behind it. But it's very likely that we're going to get mixed results. We're going to get mixed numbers. There's going to be kind of a hodgepodge of some good and some bad news, and just really blurry, muddy water that isn't going to give clear guidance. That's very likely what we're going to end up with. I hope not, but it's not always so simple and easy as saying, well, it's going to be good or it's going to be bad. And if it's mixed and they got to call timeout and get a hold of the nerds and let the nerds crunch the numbers and then give them guidance, we're likely not going to see a immediate response out of the market on these econ. The additional auctions today at 11 and 1, watch the clock. Watch the clock, guys. Just like yesterday. Yesterday was like a commercial for why we watch these numbers, right? Because it was right on the dot, right at 11 o'clock that we seen that move to the downside. And it was right at 11:30 when we seen everything begin to flip over again. We had 2 auctions yesterday that were of importance. 3, really, if you count the 1 o'clock. One good thing about doing these morning briefings is you can go back. If you are looking at a particular day on the chart, say 3 weeks ago on a Tuesday, and you want to try to see what kind of economic news happened on that Tuesday 3 weeks ago, go back into the morning briefing, because I start the morning every day looking at this. So you'll have an opportunity to see what econ was on the table that day and at what time. So I get this red line across my chart. This is like a bit of a zone. This zone comes from back here. So we are at the very top of this latest box, and this is a reversal event. This is where that reversal could happen. Nobody's saying that it should or that it will, just that we are at that spot. And we got there with a strong push, right? A real strong push. So if there is going to be a reversal, this is the spot, right? If we happen to get above it, then we want to see the market validate that level and prove that it is going to be support. Now, to get to this level, we really had to have help from a couple of big names. I pointed this out the day that it happened. I pointed it out more than just in Apple. I pointed it out in multiple products. That was a buy signal. Now I'm already in Apple. I didn't need to buy more of it, but I pointed it out and nobody knew it was going to do this. It hasn't done this in over a decade. So, if you're looking at it and saying, well, yeah, I traded a little bit of it and then I got out. You didn't do anything wrong. We came into a resistance zone, and depending on how much you were holding, that was very likely going to be a stopping point. It wasn't. We went through it, but you have to protect your gains and lock in your profits. So, you know, don't look at something like this move here and think that that's normal. It's not normal. Markets don't normally do that. And we're still down on the year in Apple, by the way. If you look at year to date percentages, it's still in the negative. But that trend line breakover signal is a buy signal no matter where you find it. Daily, weekly, 2 hour, 1 minute, 10 second. We're at the top of that range, that top of that zone in multiple big name products all across the marketplace. And it makes sense because the markets are synced, right? They generally do what the S&P is doing. 80% of the market does what the S&P does. So it makes sense that we're looking at something on that level. 46.25 is the weekly expected move. And one thing that I really like, and it's causing me to stay bullish, is the idea that we have not hit the top of the expected move yet. For many weeks now, we've been making that move in a single day. Say, we come in on a Monday, we hit the lower edge or we hit the upper edge in a single day. Just so much violence in the market. But when we're in a good, strong trend, in a good, strong rally, the days aren't as big, right? We're starting to see the decrease in volatility. From candle close to candle close, the distance is calming down a little bit. Plus, we are slowly grinding up to the top of the weekly expected move instead of making the entire move in a single day. So when I'm talking about a reversal zone here and pointing out this red bar, this is not a place where we think the market is going to fall down. It's just a place where it likely could hit resistance. And if it's going to go down, this is where it's likely to start. We do have peace negotiations or peace talks or however you want to talk, however you want to say it. They're going on right now. Bloomberg was saying that the tone between the two presidents is different now, but um, the Ukraine still wants a ceasefire before they're willing to even consider anything else. And I don't think it's going to take very much news wise for the market to see positive results. They're already pricing in positive results, and we don't even have any news coming out of the peace talks yet. So be absolutely prepared for just an extreme move based on those talks. Right? If they were to come out and call a ceasefire today, I think we would see, record-setting moves in the market. All right, so let's game it out for today. Good, bad, and ugly. We're up 0.5%. We've got an ADR near 2. Now, we've already burned 12 hours of the day, but we could easily make another 1% from our current location, which would give us a 1.5% move on the day. Use your drawing tool, plot that to the upside. If we add 1% to the 0.5% that we already have, that gives us a move on the day around 46.40. Just round up those couple of points. 46.40, good, easy number. Not too hard to remember that one. We do have a cog line at 46.11, which is likely to give us a little bit of grief. We would have to get through that, but that would be our upside move. This would not be a subtle move. If we're going to get another 1% from our current location, we would expect to see things really lit up. Now, I talked about how yesterday that move was not seen across the board in all the different market breadth things that we would typically focus on. Right? This is the tools that we would normally focus on, and you can see how the Nasdaq had that reversal from, like 25% advancing issues to 92%, but it was more of the S&P that I was referring to that didn't have signals. We came off of the 25% mark, but we barely got above 50% by the end of the day. So this thing was still showing a lot of bearish sentiment even while we had that rally up, which is why, I talk about frequently that these will only get you so far. The reason that these will only get you so far is because the FANG names alone, those less than 10 names, can absolutely carry the entire marketplace. You can have 90 names going down in the S&P, but as long as those FANGs are going up, the market's going to go up, which makes these irrelevant if they're opposite of what the FANGs are doing that day. So we want to look at them in context, but always keep our eye on the FANGs, because if the FANGs are making that move up and we're getting confluence from this, then we know it's not just those 9 names, that it's 80% or 90% of the market making that move, right? So big difference between that. Another thing that really got my attention yesterday was the cumulative tick. Now, I've wrote a couple of articles on this. One's on the Bullish Bears website, one's on the OAC website. And the indicator is shared in both of those articles. It's also shared in the Thinkorswim Discord that I made, so you can get it from there. But we really didn't have any signal off of that thing yesterday, right? So again, we had this beautiful, amazing rally up off of the lows, a midday reversal that we've studied in intimate detail many times before. And we didn't have any of our normal signals in that move. They weren't there. The only thing we had was literally the candles themselves, which is fine. We snapped a trend line on it and was able to play it, but we weren't able to get our confirming signals like we normally would get our signals. Today, we're very likely not going to be in the same boat, right? So this 1% move that we just measured out and that we were talking about, if we're going to make that move to 46.40, it's very likely that we're going to see it come in with those tools in place, right? Because it very likely won't just be the FANG names carrying us up to those highs. We're going to need the backing of the rest of the market. So one thing that we can look at when we don't have that is kind of asking the question, do we have the risk on or the risk off sectors, and where's the money flow? During the day, you can go in and hit the visualize tab, go to the heat map, watch, and check index, put the index in that you want. One of them would be the Nasdaq 100. The other one would be the S&P 100. And you can watch the money flow. You can also detach this thing and then you can load both and watch both of them at the same time. The money flow yesterday was absolutely there, right? But there's no way for me to chart that back and show you that there was money flow yesterday. You got advancing and declining, and issues are companies. So, we already looked at the issues. We've seen that the S&P had less than 50 issues advancing, but the money flow was totally bullish. We had more money going into the market than out of the market. And that was really the only confirming signal that we had. That, and look at the VIX yesterday. The VIX did a really good job of validating that move yesterday. We also seen the hedge trades fade yesterday, but almost at the wrong time frame, right? You see, when gold really started to dump, it was after 1 o'clock. Now, gold closes earlier than our markets. That's why it turns gray while our markets were still open. But gold really didn't start to make that move until 1:30. Right after it closed, it began to dump. and it dumped real hard and real fast. So the hedge trade was a little bit of a validation, but it was almost too late in the game for that, right? We were halfway through the move by that point. But the VIX was a really good confirming signal. We had that break in the dollar that helped to kind of pour fire on the whole thing, get it going, and that move in the bonds. That's really all we had. So hopefully we'll get more signals today that it won't be the market carried by a select few names, and instead we get more of a broad market rally. We are getting some serious moves this morning. You see the dollar woke up with a vengeance. The bonds broke structure. Oil also a little rowdy this morning. So things are getting a little violent out there. Notice we had this break to the upside while I was streaming, and we didn't see much confirmation here in the VIX. We want to see the VIX get below $20 today if we're going to continue that rally to the end. If we don't break $20 or even get near it, then I'm not going to be, looking for any kind of swing trades. So we got our upside move. That would be scenario one, right? That we continue this push. Scenario two would be, well, what if the news is bad instead of good and the market starts to go down rather than going up? We get back inside that red zone. We start looking at yesterday's price action. Yesterday's range is very likely going to be our range if the news is negative. Not likely to break below yesterday's low, which is 45.09. I would just say look at the cog line down there. 45.11 would be the low side target. We're not likely to get below that unless the news is really, really bad, and there's no expectation that we're getting that kind of news today, right? The econ that we're looking at today, good or bad, shouldn't be a driver to break us out of a known measured move, right? Kind of asking the question, well, how far of a move would that be? From our current location, we're up 0.5%. We dial it down, that'd be a 1.79 added to what we already got. That would put us at a 2% move on the day. That's more than enough, right? It shouldn't breach any level like that unless the news is just absolutely horrendous and there's no expectation of that. So now we've got our upside scenario or downside scenario. What's the third scenario? Though that we just don't do anything. I know that seems unlikely, but we've had multiple days where we've just legged up into a new zone and then just sat there. Right? Well, we legged up into a new zone. We very likely could just sit there and do nothing for the rest of the day. The market would look at it as, oh wow, hey, we're up on the day. It doesn't have to do anything more. We're already up. So that'd be scenario number three. Be very watchful today for a blow off top. Look for any signals of extreme hard push to the upside. We want to look for any sort of warning indications that this is a blow off top. We want to look at every consolidation pattern and begin asking the question, is this a topping pattern? You can go and hit the website and kind of use those phrases in your search. On the Bullish Bears website, the search is located in the upper right corner. Blow off top, topping patterns, reversal candles, reversal signals. Run those searches. They give you something to start with. So that covers the ES. Nasdaq, little micro double top. Notice the same red bar, but we're not in it or above it like we are on the S&P. We did get that really nice move yesterday off of the lows. Of course, it was in everything. And just like on the S&P, we had a pretty sideways night. The IB, the initial balance last night was a really, really tight zone all the way up until the kill zone at 2 o'clock, which is where we broke and began moving with conviction. Right now, we've got a bit of a megaphone pattern going on. We're starting to get some signals like a blow off top, but it's not a blow off top yet. We want to game out the same scenario as we did in the S&P. If the news is good, what's our expectations? Well, we have a 2.76 ADR, and we're already up more than 0.5%. We could add 1.5% to this, which would put us right around 2.25. That would be a bit extreme for the for the Nasdaq, but let's just go ahead and price in at least a 1.25% move. 1.25 would put us above the second red bar that I have showing there. That would be 15,278, right? It's 75 because we want to aim for the roundy. So 15,275 would basically be a real bullish case for the news today. We're very unlikely to get that unless we get each bit of econ confirming another bullish stance, right? If any one piece that comes out today becomes um, that comes in muddying the waters, then it could absolutely kill any trend that we're already in. Also, those Fed speakers today could open their mouth, stick their foot in it, and tip this market over too, right? So you got to kind of keep everything in perspective. The peace talks, the Fed is out there talking. We've got econ on the table. Any one of these things could keep giving us divergent signals. One thing is bullish, and then 20 minutes later, something else comes out that's bearish, and then something else comes out that's bullish, and it stops us from hitting this aggressive high side target. But that's scenario number one, the upside push. Number two would be, well, what if we give back the 0.5%, that the news becomes negative, we drop back down to zero, and then we make another move to the downside with an additional 1%. That would put us right around Friday's highest point, which becomes 14.8, we'll call it 14.850. That would be a really negative push. It would take a lot of move to get us down to that level, right? It can't just be a little bit of negative news. It's going to have to be some absolutely horrible news to make it drop that far. Otherwise, I would tighten those numbers up a little bit and use first the Globex low and then the pivot point from the econ yesterday at around 11 o'clock. So that gives us 1500, the roundy. Oh, excuse me, 14,950 for the Globex low, and then 14,875 for the pivot off the 11 o'clock yesterday. Those are a little more realistic, not quite so extreme. You could look at the early pivot right around that 14,900, the roundy. So now we've got our upside move, our downside move. What's the third scenario? Well, the third scenario is that we get into this first red zone, say a 1% move on the day, 15,1,200, and that just stalls us out and we spend the rest of the day sitting in this range. Scenario number three, right? That we just have a range bound market. And again, that's not necessarily off the table. We're up 0.75%. The market doesn't have to do anything else for the rest of the day. It could just sit right there. And on Bloomberg and all those news agencies, they would tout, oh wow, yeah, hey, look, another bullish day in the market. We advanced, 0.75%. But we wouldn't have to see the market do anything else to get that. So keep your eye on the advancing issues. Remember that the advancing issues can be completely discounted if you've got the FANG names running. The markets are going to do what the FANG names are doing. The cumulative tick comparison does not always give us the signals that we're looking for. So you want to find that validation someplace else. And sometimes there just isn't any, right? I mean, that's just the way it goes. Sometimes there's just nothing there that you can find. The money was the only thing we really had yesterday. Be mindful this morning of these exaggerated moves that we're seeing. This is some really extreme stuff. I know it may not seem like it if you're kind of new to trading and you've never witnessed a market other than the extremes that we're in, but these are some extreme moves in the market. One thing that shocked me this morning is I heard that Bitcoin was down while the rest of the market was up. Now, the Bitcoin's been correlating more and more with the rest of the market, and it's been a part of the ongoing discussions. When I heard it was down, it was a little bit of a shock. Now, we are back to flat and it's making its way up, but keep your eye on Bitcoin. We're not done with that thing, right? And we still don't understand all the ramifications of how it's going to impact the market going forward. The hedge trades are continuing to come off, and that's something that is worth noting and keeping your eye on. Gold, for an example. All right, the watch list that we've been using for stocks is the most liquid names from the CBOE website, the most heavily traded options names for February. Now, I've made a video on this, how I show how you go to the CBOE, you get February's numbers downloaded into a spreadsheet, use that spreadsheet, and pick out the top names on the list. Um, in the video, I showed picking out 100 names, but I don't personally want 100 names, so I tightened it up even more than that. My list is less than 50 names altogether, and some of it even has ETFs like silver, but don't want ETFs in my list. Don't want ARK in there. I ran a scan that was supposed to knock these things out. It was supposed to already have removed those things. There's another one. Get a small enough list. You've got more than enough to do what it is that you need to do. I don't subscribe to market theory logic that says, well, I need to watch all of the market and try to attempt to trade every single thing that's making a move. It's kind of a waste of my time. I would much rather focus on some of the biggest names on the list, especially if those names happen to be names with a very large beta. All right, that's shortened the list down even more. So, looking at it this morning, what names are moving in the pre market and what sector, industry, sub industry do they belong to? Names that are down this morning include AMC, nice, very, very beautiful channel, nice little flag. That's like textbook perfect right there. When you find markets like that, you want to study them better. You want to have this classic, beautiful bull pattern right there. We don't always get to see it that way, right? A lot of times they're ugly and disjointed and choppy and nasty looking. That's a really, really nice 15-minute chart flag. And we got ExxonMobil responding just like the oil futures. That puts Exxon below the weekly expected move. Thinkorswim does not show on the daily chart intraday price action until after the bell rings. Now, one little trick for that, if you still want to be on the daily chart or something very close to a daily chart while seeing the intraday moves in the pre-market, set your clock a little bit. Use a 12-hour chart. Think about it, right? It's not going to be perfect, but you go into custom, or maybe you don't even need custom, right? Go into intraday, set this thing all the way to the right to 12 hours, and then, give it a good 90 or 100 days, 180 days. Get rid of the highlight for the extended hours, and there you go. You have a chart that looks almost identical to your daily chart, but it shows your intraday price action before the 9:30 open. It's not perfect, but it's a really good trick, Thinkorswim trick. So we can see that fade down on ExxonMobil. You got to kind of see this really big head and shoulders pattern. But if we're looking at something on a daily chart, then we're looking at something that could take weeks before it finally unfolds. And we measure from there and there, and we plot that distance for the downside. Thinkorswim's got a new tool for that, quadrant lines. Just hit along the low. That wick is a bit extreme, so I'm going to hit it along the head. Market theory says 50% of the move is should be your first target, and then 100% of the move should be your second target. That would bring us down into the lows before the August earnings. It would take a long time for that to unfold, right? That's why when you recognize a pattern like that on the higher time frames, don't immediately go bearish and try to short that sucker. Looks like we're getting a little bit of a trend line breakover in AT&T. It got beat down pretty hard yesterday or the other day on that earnings. But we are starting to get a little bit of a trend line break. Reciprocation could take a couple of weeks, honestly, to get back up to that $26, $27 level. Peloton, which I continue to hear about nonstop, slightly up this morning. Apple continuing that advance to the upside, managed in the overnight hours to get above that red bar. The next level for Apple is 182-ish. Pfizer with a really nice trend line breakover. Clean consolidation. It's a little weak considering how far it broke below that 786. But if you go to get your CMT certification and look at what they consider for a higher time frame like this, a 618 pullback is not out of line. Now, when I'm day trading, there's no way I would try to call a 618 pullback. Absolutely not. But we're looking at a higher time frame, and we're talking more about analysis rather than trade opportunity, right? So an intraday pullback below a 786, I wouldn't want anything to do with it. But looking at it here, this is perfectly acceptable. It is up 0.5% this morning. The likely goal would be back up to our previous levels, right around that 55, 55 and a quarter. It would be the same restrictive high that we were looking at in the S&P and the Nasdaq and Apple. Amazon is positive year to date. A lot of the other ones aren't. If you want to see that, you can set your charts to percent basis instead of dollar cost basis, and then just set your time frame to year to date, and you'll be able to see that number easier. But Amazon continuing that bullish move, nice, clean, strong trend. Looking left, there's nothing to run into. It is worth perhaps looking at on the volume profile. You can see we're outside of the box. When we're outside of the box, we got the expectation that we're going to flip over and come back inside the box. But at this point, we're not yet doing that. This does have a little bit of feel for a blow off top. But remember what we talked about before. What is strong should stay strong. What is bullish or what is trending should continue to trend until it no longer is. Right. And of course, that's not a lot of help, but that's literally the way Dow put it. Right. It trends until it doesn't. Hey, thanks, bud. That's real helpful. Right. So at this point, it is still doing that. If you try to call tops or think that it's moved too far and there's no way it could continue to go farther now, just remember the market can do whatever the hell it wants, and there's nothing saying that it could not continue to move to the upside. It's just very unlikely to continue that strong move after having already moved so far to this point, right? And we try to approach the market with that kind of logic: is what's more likely, that we reverse after such a very far move, or that we continue after having already moved this far. Microsoft also up in the pre-market. So look at the couple of these names. They're FANG names, right? Amazon, Apple, Microsoft, Netflix, all up in the pre-market. Every one of those names lending strength to that same move that we had yesterday, the same move that we weren't able to see in the market breadth yesterday. Couple of chip names in there, including MU and NVIDIA. Couple of financials names like Citi, which got beat down pretty hard. Not much of a surprise that we're seeing that reversal in Citi. That's that mean reversion coming to life. It's a pretty aggressive moving forward this morning as well. So at this point, we're going to kind of step out and look at it from a different point of view. Got the S&P 500. Want to change this to pre-market percent. Apply a little bit of a filter because I don't want 500 names. I really just want 100. But that's not always easy to do with this thing. Ah, oh, for goodness sakes. Rah. I guess it's going to be 87. 87 will do it. Give it a color change. We are in a risk on sentiment. This is carryover from the overnight hours, right? Like we talked about at the start of this stream, all of the markets around the world had a nice, good bullish session. We're seeing that carried over into this morning's session. We're getting that confirming move in the VIX. We're getting, the weakness in oil. The hedge trades in gold are down. Bitcoin's coming back up. The dollar dropping. And we're lit up across the board. Swap this over from the S&P to the Nasdaq. Give it another change percent adjustment. We don't need to filter this. It's already 100 names, and we can see that there's a little more ambiguity this morning, a little less bullish sentiment. But those FANG names are still front and center across here, right? Tesla, Amazon, Apple, Nvidia, Google, Microsoft, and Facebook. They're every big name that's on this list, and then they stand out clearly. Now, it's an important distinction to remember that the Nasdaq 100 does not have financials in it, and the S&P 100 does. Right. So when we're bringing up those two indexes, it's not just the idea that, oh, well, one's the S&P and one's the Nasdaq. It's what names and what sector and what industry is in there. So this is the Nasdaq, and we're asking how many names in the Nasdaq are up at least a half of a percent this morning. 25. That's not overly bullish. I'm not feeling it. Right. Slightly up doesn't count. I don't care about slightly up. That's just uh, muddy water. We want to see good, strong, clean sentiment. We're at the top of the range across the board in all of the best names. So we want to see it coming into the open, that strength and conviction that's going to propel us through that strong resistance area that we were looking at all morning. And this isn't it. We can ask the same name with a little bit more aggression. How many names are up at least 1% this morning? 14 rather than 15. So those 15 names that we were looking at, it's very likely that all of these names are that same list of names. Chip, right? We got MU, AMD, NVIDIA. Got some retail in there. Nothing really stands out here, though. And this is the NASDAQ side. I'm looking at this thinking, where's all my FANG names? I mean, other than NVIDIA and, Tesla, if it's FANGman plus T, sure, but that's it. This gives a little more credence to the idea that today we'll see the sectors participate and we'll actually see the market breadth participation, the advancing issues that we were talking about. So that covers the Nasdaq. We could take the same perspective on the S&P. How many names in the S&P are up at least 1% this morning? 15 names. So again, not that inspiring, especially the names on the list. Quite a few financial names, which is good to see. FedEx, which isn't much of a surprise considering the news. So finance, 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 kind of count them up. Out of 15 names, more than a third of the names on this list is finance. And then some of the automotive names, which the automotive names in the overnight hours in the Asian markets was some of the biggest follow through names, So again, it's that carryover. What happened in the overnight hours around the world, and what's our expectations for this morning? Automotive did good around the world last night, and so here we are this morning seeing that same thing. You nailed it, Jeff. That's exactly it too. Materials. Yep. So thinking about those 11 legacy sectors that we have in the S&P and really looking for that risk on bullish sentiment. I like to use Trend Spider for this. It does a really good job in the pre-market, and it allows me to put whatever names in the list that I want rather than, like TradingView where there's a lot of restrictions on the watch lists and how we can approach those watch lists. SMH Semiconductors, the ETF, breaking outside of the daily Keltner channels. This is a strong continuation play from yesterday. Be very careful of an island reversal or a pop and fade play, right? We've seen this before. It's not just SMH, it's the idea, it's the setup, right? We're at the top of a range. We're coming into the open. We had that strong break in the overnight hours, and we're getting outside of the Keltner channels. XLY, this is a continuation from that move in Tesla. We are above all of the major moving averages now. We did get that 5,200 cross down the other day, but as I mentioned when we got that, that's supposed to be a very bearish sentiment. And yet, when you find it in the indexes and you find it in the sectors, it very often becomes like a carry on call, a bullish signal for everybody to pile in and run this thing up. And sure enough, that's exactly what we're seeing. So we do have a market back above that 200 period daily moving average. That is like a line in the sand for me personally between a strong market and a weak market. A good strong market should be able to maintain above its 200 period. For every one of those moving averages, the smaller the number, the more strength and movement there is. Right? So the 200 is a good benchmark, and then the 100, the 50, and you just keep getting it a smaller moving average. If you get above those major urges, well, that's your primary and secondary trends, right? So then you can say I'm in a market with a strong bullish primary trend, strong bullish secondary trend, right? And then of course your intraday intermediate trend. IWM, the forgotten small caps, up this morning. Now this thing has just been, it was already range bound for a year. It was like almost setting, a new record for the sleepy giant and all those perfect iron condors. Now the range is a lot more narrow. Since January, the first of the year, we've been kind of just holding in this very muted, very tight $15 to $20 range. And we're pressing against the top of it right now. Biotech is above the 50. I'm not feeling it though. Trend line break. We're holding above that highest volume when we're talking about an anchored VWAP. So we're above the 20, we're above the 50, we're still inside the Keltner, so it's considered healthy, but this move, it doesn't feel bullish at all. I don't see the strength and conviction in this thing. We could easily recapture the top of the range at around 131, maybe 132-ish with a micro trend line breakover, but overall, your primary and secondary trend is still very negative. This is the point where we want to start asking the questions, well, what isn't participating this morning? Because those names are often my go-tos, right? I don't want to go find something that's already up 9% on the morning and then try to get into that to take it even higher as we come into the open. That doesn't fit my style. I'd much rather find the beaten down, forgotten, unnamed, unknown, untalked about market and look for a reversal in that thing and run it back up. So what's not participating in this move this morning, and could we find some opportunity in there? Well, we got the hedge names, the devil's metal, silver, got gold, energy markets, and USO. We could absolutely see these markets try to uh, turn things around. But at this point, they are headed to the downside. Energy and finance has been really correlated over the last 16, 18 months. So this morning, we don't have that. Not even a little bit. We've got really strong financial names and really weak energy names. Well, if we're going to maintain that correlated state, one of these two properties are going to have to give. So either finance gets weak and starts coming back in line with oil, or oil strengthens up and gets in line with finance. Now, considering the moves we've been seeing in the bonds the last few days and the beatdown that came in finance, right now it's just that capital rotation. Speaking of finance, there's 1.42% this morning. Primary trend is positive, but your secondary trend is a downtrend. Right? We can say that primary trend is bullish because we're above the 50, the 200, the 20, we're outside the Keltners. So, looking at the primary trend, it is bullish, but we got lower highs and lower lows on the swing high, swing low, swing high, swing low, each one setting a lower and lower level. So, your secondary trend is still down. But on the morning, we've got that gap up, red to green. We're expanding beyond the Keltner channels. We do have an opportunity to continue to see that move today, but I would be very cautious of that, right? Approach with caution when it comes to those financials. Is the move in the bonds? That is absolutely crazy. And the dollar has gone from 99 to 98. 99.2 to 90, 98.3. So the dollar has dropped almost $1 this morning. It's down nearly 1%. And the bonds are beginning to rally. We're seeing oil continuing to fall, the VIX continuing to fall. So, yeah, it's just really extreme out there. The financials are going to feel the brunt of this move in the dollar and the bonds first. So, when we talk about those sectors, those legacy sectors, what it doesn't cover are more of the modern sectors that we have to break out and bring over on our own. Things like the crypto sector. There is a crypto ETF nowadays, but we want to look at the legacy names that we've been using for crypto and for blockchain, right? So this isn't a list of different coins. This is a list of companies that are heavily vested in coin or that are heavily vested in the blockchain. One of those names on the list is Riot, which I sold some puts in this when we broke out. This is something that I'm looking for on the longer term to get back in again. I was in it before all of this, but I took my profits and I've been out of it. Now I'm just looking for an opportunity to get back in there again. I'm thinking we could at least run it back inside the channel, maybe run it back up to those mid 30s. It's a longer term trade, right? Just looking for some opportunity out there. I sold puts on the idea that I'm willing to own the stock. So if the market runs down and runs me over, then I'll just take the stock and sell calls against it. When we go down the list, we can see that the blockchain or the Bitcoin names this morning, they're up. So as a sector overall, that's one direction we can go. The electric vehicles is another legacy or another sector that we have that doesn't fit the old school legacy sectors in the S&P. And you can see it's really bullish this morning. It's more of that carryover. Even some of the old school names like Ford and GM are up quite a bit. We got that failed flag kind of coming into fruition. Li Auto and NIO. Now on NIO, we are still below that 50, but we challenged it the other day, had a nice little pullback to the 20, and now it looks like we're getting a running start to re-challenge that 50. It'd be nice to get back above that 50 and see if we can get beyond. I know it's probably hard to see in the stream, but there's a anchored VWAP right above that 50. If we can get back above $22 on NIO, I think the 26 is in reach. And the pot stocks. Again, this is another name where there is an actual ETF that we could look at, MJ. But when it comes to the pot stocks, you really got to kind of break it down between, are we talking medicinal, recreational, CBD oils, right? There's more to it than just saying, well, it's the pot stocks. Just like with finance, you can't just paint a broad brush and say, well, it's just finance. So we kind of gather up our own list of names, stuck them in the list, and we can see this morning it's kind of a mixed bag. It's some of the pot stock names are doing really good, like Cron and Tilray and CGC, but then some of the other names like SNDL were down over 1% this morning. All right, so that's the morning, guys. I really would be focused on finance and energy again, as usual. Because by now, if you're not already allocated into the tech names that are making this move, I don't want to say you're too late, but you got to kind of consider how far they've already run and then ask that question, like, what's more likely? Are they likely to continue to go even farther now, or is it likely to pause and consolidate and pull back at this point? And there's no really good way to answer that without taking just a lot of risk to be able to do it. Something like a strangle or a straddle could put you in an either or trade, but it takes a lot of buying power for that. And we could just consolidate. And then that either or trade is going to be the trade of risk, right? So technology, if you miss the boat, you just missed it. Prime up, get ready for another run on it the next time, and focus on something else. Oil and finance are making really big moves. You still got the consumer discretionary, which is, I mean, it's mainly just Tesla, but the consumer discretionary making moves. So there is other opportunities. For the day trade, it's going to continue for me to be finance and energy. That's been the day trade go-to for me for the last 2 months, and I'm not seeing a change in that at this point. They're cheap, they're liquid, and they've got a really great beta. Um, Pool man, I don't have a good answer for you because I have no idea what Rose does. Maybe somebody in the chat here could give you an answer. Guys, when Rose is streaming on Thursdays, does she still come over and live stream into YouTube for free for people? As far as I know, when she was doing that, she was also streaming in the large caps room when she was doing that. And I don't think that she does that now. I, I don't know though because I have no idea what she does. I never watch her streams ever, and I have no idea what she talks about. So if somebody in the community could give this guy an answer, help him out, that would be awesome. I'd appreciate it. I'm sure he would appreciate it too. Make sure, Poolman, that you ask that question on the YouTube part of this video, right down below after I hit and get it published, because the chat between us right now is going to be on Restream, but I'm not quite sure it will show up in the chat when I replay the video on the YouTube. So make sure you go back and ask that question again after it's published, or just come by the Discord.